Hello and welcome to the Crypto Corner here on Schwab Network. I'm Jenny Horne, and each week we'll dive into the latest moves in Bitcoin. So joining us today is Nate Peterson, the Director of Derivatives Analysis at the Schwab Center for Financial Research. So as of taping Wednesday, Bitcoin is nearly at 95,000 after spending most of the last 2 months under, of course, around 90K. So tell us the latest with the charts here, Nate.
Yeah, sure. Let's take a look at Bitcoin here because it has been certainly picking up some momentum. We've talked about recent support around that 200-day SMA. We've talked about its relative strength over the past couple of weeks with, if you were to overlay the Qs or the NASDAQ and look at how it's sold off, post-Liberation Day, Bitcoin kind of held in there relatively well. And then you look at this downtrend line. Since we hit that peak back in January, you can see that line is drawn there. So we had this convergence essentially with support at the 200 SMA along with that downtrend line from the peak in January. And really over the past week or so, you can see we've broken above that downtrend line. So that's incrementally bullish, of course. It's bullish that support held at the 200 SMA. I also had some minor resistance around that 89.5 to 90K-ish level. We're above that right now. Anything can change in these kind of markets. We could pull back there tomorrow, but just incremental bullish development on the charts here. Now, I will say this, if we're looking at resistance, the next key one that I've got is around that 100K level. For whatever reason, there was a lot of time that we spent between 97 and 99K back in February or so, and it just didn't seem very eager to push above that 100K. We did get there, of course, once in December, once in January. If I were a bear on Bitcoin, the only thing right now that would concern me is that let's keep an eye on that peak in December and peak in January. It does look a little bit double top-ish, so if prices continue to rise, number one, the technicians, the bulls, that is, would like to see it get above that 100K convincingly. And then at roughly 109-ish, we'll call it, is that all-time high peak there. So a move above there would also be, it'd be a big technical event because it would kind of take that double top consideration or orange flag off of the charts. And Jenny, technicians are, interesting bunch in the sense that right here at 94, perhaps there's not much of a setup, so to speak. If it moves up to 98, that's not much of a setup. Some technicians would rather buy Bitcoin at 102 rather than 98, meaning it's cleared one line of resistance, or they'd rather buy at 112 when it's breaking out to a new high rather than to buy it at 102. And so these are the levels that we'll keep an eye on, but certainly it looks like Bitcoin is trying to break out of this traditional relationship with risk-on assets, and so far it's doing a good job.
It definitely is. And speaking of some of these technical events, gold prices, of course, hitting an all-time high earlier this week, now falling a bit. How does Bitcoin really stack up against this parabolic move we've been watching so closely in gold?
Yeah. Gold, gosh, what a great performer, up 50% over the last year. Clearly, there's been heavy central bank buying that's been going on over the last 6 months, and increasingly so. Look, over the past couple of days, we pulled back a little bit here. We were up at, 3,500 at one point, now back down to roughly, we'll call it 3,250-ish, 32, around there. This, to me, just looks like it's more of mean reversion. The RSI had gotten up to 78 or so. So there's some profit taking. We've gotten a little bit extended on a short-term basis, but that uptrend is still intact. And when we look at what's going on with gold and Bitcoin, things really started to kind of heat up around these two assets after the Liberation Day, because the week following, the week of April 7th to 11th, what we saw there after the higher than expected tariffs, we saw sell-offs in bonds and sell-offs in stocks and sell-offs in the dollar. And what really kind of shook the markets there. Now, luckily, treasuries have stabilized. The dollar isn't going down as much. It's trading around that par level that's supposed to be support. But traditionally, when there's distress in the financial markets, these are safe haven assets. And if they're not going to treasuries and they're not going to the dollar, it looks like they're saying, okay, well, then what's our alternative? Perhaps it's Bitcoin, perhaps it's gold. I would say gold technically looks better than Bitcoin. How can I, refute that it's breaking out to all-time highs and the performance that it's done? Maybe it's still even a little bit near-term extended here, but just think about what's going on with trade, with the potential disruption to the financial system, with potential stagflation. These types of assets are meant to be finite assets that are alternatives to the money debasement that we see in fiat money. So when we see prices going up in hard assets like real estate, like gold or Bitcoin, et cetera, I would think the traditional consumer just thinks, hey, these assets are becoming more valuable. And you could argue that is the case. Another way to think about, if you look at a longer term, how these hard asset prices have been going up in value is that the value of the dollar, that's the money debasement, is taking or is diluting the value of the dollar, the purchasing power of the dollar. So that's where Bitcoin and gold really do fit into that same category. Then look, we've got a finite supply of gold. Although we don't know exactly how much it is, we can agree it's finite unless, we count the asteroids out in space. But there's an economically feasible amount that you can take out of the ground. We know that Bitcoin is finite at 21 million coins, and there's even, several million that we believe are lost as well. So each one of these assets has a little bit going for it in the sense that Bitcoin is more limited in its code that can't be changed, in its halving process that it does roughly every 4 years, and its max cap at 21 million coins. What gold has going for it is its history. It's been around for longer. It used to be used to back money. We got off the gold reserve. So it has that perception of a store of value. It is one of those assets that right now is really friendly to central banks. And so it's interesting to see these dynamics go on at a time where the global financial system is getting rattled a little bit. Hopefully we can work it out. We're not here to be, extremists or fearmongers, but we have to admit there's been some disruption here over the past month.
Oh, absolutely. And just the way we've seen, so many investors flee the U.S. dollar. I think a great point there at finding this flight to safety, which has actually been kind of compelling to watch as we've seen, of course, this digital gold narrative really take hold for Bitcoin. But also, I am curious about then the relationship in that entire conversation to then the other precious metal being silver, because really interesting time to talk silver. I never thought I would be saying those words here, Nate.
Absolutely. And look, silver is up 3.5% today. It kind of caught my eye because silver has been underperforming gold. A lot of the gold bugs, what they would look at is they like to do the silver to gold ratio. How many ounces of silver is equal 1 ounces of gold? And if you look over the 100-year average, it's about 40. So if you look at what that ratio is today, it's around 100. Meaning 1 ounce of gold used to be 40 ounces of silver. Now today, 1 ounce of gold is worth 100 ounces of silver. It tells you that relative outperformance in gold, meaning the money, when it wants to get store of value, when the money gets converted, the dollars or the currency, it doesn't have to be US dollars, gets converted into gold, that the preference has been gold as a store of value over silver. So what's going on there? Well, first, silver does have some industrial applications. It goes into semiconductors and some other electronic products. So why is that important? Well, if we go into an economic slowdown, if we get a recession, things of those nature, if there's less silver consumption because there's less electronic and semiconductor consumption, then that tends to hurt that supply-demand equation with silver. It's too early to say anything about silver today. I think it's noteworthy in terms of its outperformance, especially that it's up 3.5% and gold is down. And we know that Bitcoin is up. It has been doing well. So we've got these three assets. These are kind of your three primary buckets, I think, that investors that are looking to either have some diversification or to look for some relative safety. It could be one of those places to consider. What does silver have going for it? It's because of that ratio of roughly 100 to 1. What if, if there were bulls on silver, what they might throw out there into the market psychology, and it's been thrown around there for a while, to be honest. So this isn't anything new. But what if silver were to mean revert to its longer term average of 40 to 1 roughly? So we'll have to wait and see whether there's going to be more traction with silver. You look at the technicals, they're a little bit more choppy. We're trading around $33 an ounce here. If you look at the highs historically, $49 or so was roughly the high back in 1980. And then back in 2011, post GFC, we got up to $45. But really, since then, it has been underperforming gold. Will it have a chance to basically mean revert because perhaps investors are looking for more ways to get some diversification away from currency, away from fiat, away from the US dollar? Then perhaps one of these three assets might receive some of that money flow. We certainly see it this far, not even just this year. We've seen it for some time. And, look, Jenny, if you look at the money supply, when I talk about money debasement, just pull up a chart of the M2 money supply. We increased it basically 40% when we did our COVID printing. We hear that term, the Fed's printing money. So that's monetary debasement. That's more money that's out there. And when it goes up big in supply, I think that's a large reason why we've seen both Bitcoin and gold outperform. We'll keep an eye on silver and see if it has any more traction.
Yeah, all three of these asset classes looking like they're getting at least a vote of confidence on the week. Of course, we'll be revisiting this weekly, but right now, definitely looking resilient, which, again, shocks me to say. But we so appreciate that context and all of the great insight. Nate Peterson from, of course, the Schwab Center for Financial Research. That wraps up this edition of Crypto Corner. If you liked this episode, let us know in the comments below. And be sure to subscribe to Schwab Network's YouTube channel. I'm Jenny Horne. Thanks for watching.